why will Saudi Arabia be more cautious this time around, despite the hawkish turn from the White House?
Thanks, Alex. I guess we have to go back to what happened back in November. And obviously, President Trump had the last minute change of mind and handed out 8 waivers, which effectively triggered a very significant sell-off in the oil market throughout most of the month in November and December. So I think the Saudis are gonna be holding tight here. See what the final outcome of this is on May 2nd, which is only a few days away at this point, and then see how those reductions in Iranian exports are actually accomplished. So they're going to be monitoring the situation carefully, and obviously they cannot really afford another sell-off in oil prices down to $50 a barrel. So my sense is the Saudis, as well as the Abu Dhabis, are going to be watching the price carefully and adding barrels as needed. And I think the same thing is true for U.S. shale producers. I don't think they're going to rush to ramp up supply like they did last year. Capital discipline is the name of the game in the U.S. shale patch. So I would expect this rally to be more sustained. We have an $82 a barrel target for Brent, which, by the way, we've had since November of last year. And we see that price those prices in this quarter, and then we think there's a risk of a further spike into year end.
So, Francisco, if in fact the oil markets are basically saying, show me the money, show me the real curtailing of Iranian exports, what will it take for the market to react?
Well, I mean, I think the markets, commodity markets tend to be real, kind of real-time kind of markets in the sense that they do not anticipate like an equity would. Equity markets are forward-looking instruments. Commodities are basically looking at supply-demand today. Occasionally, look 1 or 2 months out. And I think in this particular case, they're going to be quite cautious watching the reduction in Iranian exports, because remember, some of the Iranian partners, like China or India or even Turkey, may decide that they want to keep importing barrels despite the risk of U.S. sanctions. So we don't know how that's going to play out. So I think Saudi Arabia has rightly said, as soon as those reductions start to take place, we will be filling up those barrels for Iran's customers right now. But we're not going to do it as soon as possible. We're just going to wait until we get the call.
So, Francisco, is the curve mispriced? Because if you take a look at the Bloomberg here, this is the curve now for Brent versus just a month ago. We've obviously seen a huge re-rating in the front end by, I don't know, about $10 or so. But the back end really hasn't re-rated as much. Is that appropriate? Is that enough being priced in?
Right. So I think it's a great point that you're raising. We've been making the case that, oil longer term is a $50 to $70 commodity. So it's hard for the back end to move away from that range. Now, here's the risk, right? The risk is that the front end keeps going up, and eventually, because let's say that we end up losing a chunk of Libyan production or some other country, or maybe we have an uptick in the global economic cycle because the U.S.-China trade negotiations eventually get to the right place, and we have an uptick in global PMIs. I think that's what could actually start to pressure prices higher, and it may be a little bit more difficult to do it, to stop a rise in prices in an accelerating economic growth environment. Remember, so far, growth has been decelerating for months now, for quarters, right? So I think if we have an upturn in global growth into the end of the year, if this upturn comes together with all these fuel specification changes, IMO 2020, basically this bunker fuel change at the end of the year, this is the kind of risk that could create a spike into year end. We don't think it's very likely. We think it's just a risk, but something to really watch carefully. Oil could be a lot higher than it is today under those circumstances.
So what's a lot higher?
A lot higher could be as high as $100 a barrel. I don't think it's a base case scenario for anyone. And again, for us, our base case is that we hit $82 Brent. But I do think there's a risk that prices keep rising because Heading into year end, we have this big bunker fuel specification change that is going to lead probably to a big jump up in oil demand globally. Just because some of the bunker fuel that is not going to be used in ships anymore has to be used by some other industry, mostly power generation, and in the meantime, the shipping industry is going to move to a lighter fuel, which will have to be produced, and refiners will have to put more crude oil to create that incremental fuel. That's basically marine diesel. So that's one big reason. And then, as I said, I think the other factor to watch is whether the cycle is sticking up, and the green shoots in China and the green shoots in other countries that we're starting to see actually materialize and lead to a stronger growth, weaker U.S. dollar environment as well, right? Those are the kind of things that we'll need to see to get that spike.